Hey guys, good evening. It's Thursday, June 20th, and I am Ronnie, and you're trading with Ronnie. So today I want to just go over some earnings trades that we talked about yesterday, and I have some also um, overall picks for tomorrow, as well as some longer term and swing trades that I'm holding on to, and some positions that I added onto today, and the market overview as well. So let's start quickly with the market overview and then get straight to those earnings trades. So first we have the S&P Cash Index. I have to mention this today because it is so bullish. We have now crossed into all-time high territory. So we started the day right at the all-time high. Pre-market, the futures were above the all-time high, but the cash market started the day at the high, just just underneath it actually, or just above it rather, and then it just started fading. It faded based on there was some news that came out during the day with respect to uh, a drone, a U.S. drone in the Middle East that was shot down over the Strait of Hormuz. And so there was a little concern there. The market started tanking. The president also made a comment around this middle of the day here, around noon Eastern time, and 11 o'clock to 12 o'clock Eastern time. And he basically indicated that there was going to be some action potentially taken against Iran due to this. Just a little while afterwards, he changed up the language and basically indicated that it could have been a mistake or an error on the part of somebody outside of the Iranian government themselves um, that shot down this drone, so that they would have to potentially look into that a little further, basically. So you can see, very news driven. As soon as that news came out, the market's gone straight back up and has actually closed at an all-time high. So if you take a look at the daily, we are over the all-time high just a little bit, but we did close at an all-time high, barely. We have a huge hammer candle right here, so pretty bullish actually to be able to recover all of this downward action in the overall market and recover pretty much all of it. It basically filled the gap to the prior day's high um, from the open. Basically, just filled that gap, tapped it, and has just been, just screaming bullish ever since. So it makes it a little bit hard to take any short positions or to hold on to any short positions, even if they're not overtly short. For example, I have some options positions that are short in the sense that we have sold call spreads against some positions. So those are even hard to maintain at this point because everything is just going so high and very bullish, very overextended at this point. A lot of stocks. So let's start with the earnings trades for today. So yesterday we actually talked about Oracle and AOBC, which is American Outdoor Brands, as two potentials for um, earnings trades today. I did not take a trade in AOBC, but we'll go ahead and put it up real quickly. You can see it didn't really do much, and it actually, if you were to get in right at the beginning, it did fill the gap from the open all the way down to the prior day's high. But as you can see, this is a 1 minute chart, so it was quite quick. And anyway, it wasn't the trade that I was interested in. I was mostly interested in Oracle simply because of the chart pattern as well as the price action on that particular stock. So let's talk about Oracle. I did take a trade in here. We'll just make it for the first few hours of the day. So, Oracle, we talked about yesterday that it could potentially get over the all time high of 55.53, and we put some targets up based on Fibonacci extensions from the overnight action. So you can see here yesterday when we were talking about it, it was the conference call was going on, and so it was still underneath this 55.53 level. Granted, it had spiked up above that to 56.87 or so. And what we talked about is if it continued to kind of hold up in this area here, we would want to look for an opening or an entrance into the position to the long side right off the open, and potentially utilizing the overnight high as the first target, and then this first extension up here around 57.85 as a second target. So as you can see, it did start to show a little. I mean, it was a little choppy in the morning. You can see it was a little weak. It was strong, weak, kind of consolidated around this 200 moving average on the 1 minute chart, and then started to make its way back up. So if you take a look at the 2 minute chart, yes. So as soon as it crossed above this 50 moving average here, I took a trade in this. I bought a small piece here um, uh, at the kind of a dip buy type of trade. So what that means is if you can tell, it had a red bar, and if you look at the 1 minute, it was actually more than one, I believe. Yeah, it had a couple of down bars, and then had 3 or 4 green bars in a row with a little bit of volume. And this first bar is green, and it did have a high volume as well. So all of that, I took all of that into consideration in making a trade. This is another trade setup of mine. It's called a dip buy, which means that if it has red to green, so if it goes red bars to green bars, I use the third green bar as my entry point, and in this case, it corresponded with this 50 moving average on the 2 minute chart. So I went ahead and took a trade, part of my trade, a third of my position right here in this bar. As it crossed over the first 1 minute high here, right here at 56.43, I took another trade in the position. I added to the position. So I added my second piece of the position, which was the other 2/3. So I put 1/3 in here. The other 2/3 of my size went in as it crossed over the first 1 minute high. That is also the first 5 minute high. And actually, I think it's the first 15 minute high as well, or actually, no, it's 5 minute. I think this is the 15 minute bar here. So I usually, for entry points, I utilize the first 1 minute or 5 minute bars as an entry point, or to set my targets. So entered here, and actually it started moving pretty well to the upside, but had a double top actually right here on the 1 minute chart. And it looks very clear on the 2 minute as well, but I was looking at it at the 1 minute chart during the day. So at the 1 minute chart, you can see it made this green bar, and then all of a sudden there was a small red bar, but it was a double top. So and started coming down straight with a little bit of a volume actually down below the prior bar, the prior green bar. So I actually had to ended up getting out of my full position right here as it crossed underneath this green bar. The reason is that I had already made a pretty good profit in the position. I mean, usually I would wait in this position a little bit longer, utilizing the 2 minute or 5 minute even as as a guide. But you can see here, none of these red bars ever go underneath the green bars that that we're talking about on the 2 minute chart. However, this one did as well. I went ahead and preemptively sold it on the 1 minute just because it was the market was going down. It was a weak market, so I went ahead and took some profits as well, um, while I could. And it turned out to be an okay, actually, okay place to take profits. Granted, I could have probably held in for a little more, but it did end up going higher later on in the morning and into the early afternoon. If you take a look at the 5 minute chart, let's go ahead and put it on 5 minutes. So I exited the position here. but it actually did cross back above that and go all the way to 57.47. So that's about a 40 cent loss. But I didn't have to deal with this volatility here, the potential of this spike low, which probably would have stopped me out. Um, so I think I'm feeling pretty good about the entry and exit points. So from 56.08 to 57 ish is pretty good for a quick trade in the morning off of earnings. And that's what I like to do with earnings trades. I really don't like to stay in them too long. I know I sometimes I have if they're not showing too much weakness and they're just consolidating, but it's not what I like to do. Earnings trades are pure momentum plays, and um, I like to play them early in the morning. So that's Oracle. Just going over a couple things I had to adjust in my portfolio today. I just want to, let's see. So we talked about Snap, Netflix, and Lyft. So Snap, I actually had to get out of. I told you I got out of it, and I was going to keep an eye on it to see if it ever got back above the 15 area, this high right here. Today it did peak above that in the beginning of the day, but then showed weakness as the rest of the market did. So still keeping an eye out for a potential consolidation and then continuation move in Snap. So it's made a considerable move to the upside from breaking this trend line here around the $12 area. And so $3 move in a $12 stock is a big deal. So we're going to wait for some consolidation in Snap and just keep an eye on it to see if it goes any further. So I don't have any position in that, but I do have it on watch for sure. Secondly, here is Lyft. Um, I'm actually still in Lyft. I told you that this would be my stop right here at the base of this spike. So I'm going to go ahead and just tag it so that we know that this is actually my stop. Make it red so you can see what I'm talking about. So I'm still in Lyft. Hasn't hit my stop. Again, just as a reminder, this is a pretty big basing pattern, reverse head and shoulders, and so we're looking for a continued upside in Lyft. Potentially into the $70 area. So that's the target. Of course, it has to get through 65.44 first. So we still have Lyft. Next up is Netflix. This stock is pretty challenging right now. Like I told you guys, I have a call spread that I had to roll out today, actually. So my call spread is basically a short position in Netflix. So it has shown a little strength. Yesterday, it did peak up above this uh, declining trend line here, and today it made a pretty big doji above that trend line, and the base of this doji is actually right at the trend line. You can see here on the left chart. So if it did not recover its full move today like the rest of the market, however, so that gives me a little bit of um, it's a good sign anyway for the stock potentially reversing tomorrow or day after and continuing its downward move. So I am still in that position. As you can see, I haven't bought back my call spread that I'm short. So I will continue to monitor Netflix. I'm going to just move that alert a little bit lower. And I'd like to also be alerted when it gets back below this trend line because it did show some support there, a pretty big support there today, although it was kind of in confluence with the news. So, this relative weakness here on the left chart on the daily towards the end of the day, where the rest of the market was pretty much going, straight up. This, the rest of the market pretty much went straight up the rest of the day, but this stock did not make the same move. Instead of it going up like that, it actually had this downward move into the close. So it's still in my portfolio, still looking for Netflix to hold here pretty much or go lower. So that's what we're looking for in Netflix. Um, and those are the three positions that I had on hold. I will tell you, I got into Adobe. So Adobe was an earnings play that we had from 2 days ago. So yesterday was the earnings play. It actually reported 2 days ago after hours, and yesterday was our earnings, um, the earnings play that I made in Adobe. Um, it showed, as we talked about on yesterday's video, it showed quite a bit of strength towards the end of the day yesterday, and it continued to be strong, actually gapping up today a little bit. You can see on the daily chart it gapped up today, from yesterday's high due to probably the strength in the market, going to all-time highs, etc. So at the open, I bought an option, a call option on Adobe for July, and am still in it. So you can see this one option up here. I have a target in Adobe of about 320. That's my target, and the rationale for that, if you take a look at the weekly chart, it's kind of in the middle of this um, megaphone type pattern. You can see, I know there's a lot of lines on this chart, so let me see if I can make it clearer for you. You can see the megaphone type pattern from the highs and the lows. It's kind of a channel, and it's sitting right in the middle of that channel right now. So, I mean, just from a measured move perspective, like from a measured move of the move it's made in the past couple of days, if you take that and maybe add about 50% of that as a move it could make going higher before it starts to retrace, that's around 320. So I mean, I don't expect it to just go straight up to 380 to the top of this megaphone. Usually, a stock isn't gonna just gap up every single day. So I anticipate. If you take a look here, it's a good example. Here's a breakout. It went up 2 days in a row, kind of uh, still meandered up a little bit more from there. But you had some retracement in there, backing and filling. But I expect, if you take a look at the daily chart here, that it will continue to show strength as the market is showing strength. It was quite strong towards the end of the day. You could see it went above the high. My I was a little bit in dicey water here, but it towards the middle of the day, but it never went below that first bar, so I was not at all concerned. I actually got into it right at the beginning of the day for a potential break of the $300 level. When it didn't do that in the beginning of the day, I just held on and watched it as long as it wasn't going to get below my entry price. I was going to hold on to it. So right now, I mean, you can see it crossed through with high volume, like heavy volume here. You can see towards the end of the day. And I'm not really sure why my time is incorrect on this chart. This is like it's Pacific time or something even earlier than that. But this is, you know, uh, towards the end of the trading day here. So you can see that there was some significant strength, bull flag, and breakout, bull flag, breakout, bull flag, breakout, pretty much towards the end of the day with high volume as the market was making all-time highs as well. So I think Adobe is going to be a good trade for me. It's another case of you could have held out on your earnings trade for a swing trade, right? So I could have held this into into today and would have gotten quite a bit more value from the trade. But you could see the move it made from 290 down to 286, then back up to 291. I mean, that was definitely a lot of volatility and could have gone in any direction. So I did get out. Again, like I said, like to do my trades earlier in the day after earnings. But because it was on my watch list because I had just traded it and it's the second day, after earnings, and I usually keep those on my watch list. Um, and it showed quite a bit of strength this morning. So it was a really good opportunity to try to get some more value out of this name. So that's Adobe. So I think that's all the trades that I actually had for today. I do have stocks on my watch list, that we've talked about, and some additional ones, the basic Fang names, always, and they're all showing strength, but not as much strength as the semiconductors have been showing, or the housing market. If you take a look at the housing stocks, they've actually been super strong. This is the home builders index. You can see this giant. Uh, if you look at it on a weekly, there is a inverse head and shoulders or a cup and handle, however you want to look at it, and it is crossing through this 4160 area. So home builders are strong because rates are low. So there's other areas of the market outside of technology that are showing strength. So just keep an eye out for different options and opportunities outside of your basic tech opportunities. And I wish you all luck. Have a great evening and happy trading. Thanks for joining.